Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson. All right, guys, it's Tuesday. Let's catch you up. Now, we have had very little movement since the week began. We had a very hard push last week. We got up into these new highs. These were the areas I told you to look for your longs. If you got some of that, congratulations, good for you. We're able to make a little bit of money. Now we're into a situation here where it's very much sit on your hands. It's very much wait and see. If you guys really want to be careful about this, you're going to want to sit around and just wait to see which way the markets take us. We have now cleared this overhead area, but you can see it's up, back. We're just hopping along. Look and compare to what we've seen in the past on these runs to the upside. Strong up, a little bit of a pullback. Pretty good, strong up. I mean, overall, the general direction is up. Here we go again. Up, pullback, straight up, pullback, straight up, pullback. Now look what we're seeing. Straight up, pullback, a little bit of up, kind of a big pullback. These are all coming at the end of the day, by the way. Kind of a little bit of up here, pullback. It just looks like it's gasping for breath. That's the best way to describe this. So if the bears are going to take over, we want to wait. Okay, you want to wait, and you want to make sure that the bears actually do come in and they do actually kind of show some sort of commitment, if you will, because we're just not seeing it right now from the bears. And the bulls, while they're not necessarily running it up, we usually wake up to a gap up and then a little bit, and then at the end of the day we have that pullback. That's been kind of the theme the last couple days since we started the week. We don't have a lot of economic data coming out this week. Things don't really start to kick off until about Thursday with the economic data. So overall, pretty muted week, pretty stunted week, unless of course something pops out of Europe or whatever, some surprise attack news from wherever comes out. That could move the market, but overall, you can see that the markets are free to do whatever they want, and they're deciding to grind it up, and I do mean grind it up. So you want to be careful up and above these areas. This is what we're looking at here. We have this push, pullback, push. Okay, so we're on and into these overhead areas. This still looks corrective to me. I'm really struggling to find a really good, strong, impulsive. It doesn't have to be, it doesn't have to be straight up or anything. I'm not saying that. Because we saw that a couple summers ago after the big debacle of 08, 09, it just grinds its way upwards, and that's exactly what we're seeing here. And that's why I'm saying, listen, everything you see in front of you is bullish. I know it doesn't look convincing, and it's kind of a bother because it's more sideways than up, but it's up. So we must stay with that. We must go ahead and just give the benefit of the doubt to the bulls in this case and play along. And if that means we crawl 5 points today and 3 points tomorrow and then another 5 points tomorrow and then sideways, then you know what? So be it. Don't get too antsy to get too short too soon. Let the bulls show you that they're ready to kind of run this thing back down again. I do believe we are a bit extended here. I do believe that time is coming, but you do want to be patient so you don't get your hand slapped too early. Very common that young old, it doesn't matter. I shouldn't say young traders. I should say all traders. It's very common for traders to want to be, how do I want to say? I can't think of the right word. They want to be they want to go the opposite way of the markets. What's that word? You guys are thinking of it, and I can't seem to think of it right now. People want to get in to the opposite. Like, we're up too far, we got to drop. Contrarian, that's the word I'm looking for. They want to be contrarians all of a sudden. You know what? For the time being, let's just let the bulls have their day. When the bears are ready, they'll start to drag it back down. First places to look are below the 13,000 or so on the diamonds, and I'll give you a couple other places to look at on some of the other charts. But right now, until we get back below 13,000, just let the bulls have their moment. And when the bears are ready, they should drag it down, much as we've seen here. Look, all these pushes to the downside here and here and here and here have been pretty decent. I mean, it's been day after day after day. We're not seeing that yet. So be cautious. The NDX, this is a really good one to go long. You know how I feel about this. If you followed me for any length of time, I prefer to go long this indice over all of them. But notice what we've been seeing. Here's a huge gap up, pull back at the end of the day. Gap up the next day, pull back, end of the day. Gap up, pull back. So it's lather, rinse, repeat for the time being. If we see a gap up tomorrow or something, look for a pullback. If we see a gap down, and it doesn't really go anywhere, look for a run up at the end of the day. It's really pretty simple. So what we're looking at here is we want to get back into this gap area before I really start looking at the bears as being serious here. Even so, I'm not a big shorter of the NASDAQ. I would rather go long the NASDAQ than I would short. I would rather short the Dow. I'd rather short the SPX, something else. They seem to do a little bit better to the downside, where this NASDAQ, especially when it's strong, which it has been lately, has a tendency to turn faster and drop slower than the other markets. So there you have it. That's why I like to do that. So we're watching this back above these levels, still something to be watching for. But as I said, seems to be getting a bit extended in here. We're going to wait and see if we don't get that pullback. But as it is, look, it's just boom, boom, boom. It's just straight up right now. So play it up. Okay, play it to the long side. Looking for pushes back above these areas. I really like it back above 2750. To the short side, like I said, I want to be very careful. It's got to get back in this area here before I start to really think bearish on this particular monster. But right now, yeah, go ahead. Continue to play it long. Just remember, if it happens to move up, especially at the beginning of a day, that we've been seeing a lot of these late afternoon drops. Not saying that'll happen every day, but want you to be aware of it because it's happened now like 3 days in a row. So you want to be very, very careful of that. From a weekly perspective, we'll see where this closes at the end of the week, but just keep in mind it's still very bullish. It is more bullish yet on the weekly time frame here as it pushes its way up. Now we are at some overhead resistance right here, so I'm very curious to see where we close the week. Do we close it high? Do we close it back here? What are we going to do? So it'll be very curious for me to see what this weekly candle looks like. But right now we're right at this overhead resistance level. I don't have it marked in here, but we're at this overhead resistance level. And we'll see if it'll hold coming into the end of the week. This is something I'm covering with my subscribers. If you want to know more about the NASDAQ and what I'm looking at, what I'm thinking of, that's the place to do it. Sign up for the newsletter and get your fill. SPX 60-minute here, pulling up and over this channel we've been following. Look at this nice little push, but once again, stepping its way to the top. So waiting to see if we get that pullback, waiting to see if we get that drop. Right now, futures are down, like, I don't know, a couple points, but, you know, that can all change before the morning hits, so I'm not going to get too excited about it. As I said, when the bears are ready, they'll pull this thing, they'll do what they're going to do. But as it is right now, look, we're just stair-stepping our way up. This is not, okay, it's still bullish. It's still up. It's not strong bullish. So if you're going to play it long, let me just recommend that you be very, very cautious with the trade. Maybe drop your position sizes. Maybe take your profits at the end of a day. And then look to get in the following day and lather, rinse, repeat. If you're going to get in and hold for extended periods of time, it's your money. It's up to you. But let me just, caution you about the fact that when these things start to get kind of lazy up here, unless you get that hard shove to the upside by the bulls, this thing, you'll wake up one day and be 8-10 points down on the markets. And in that case, an 8-point drop is already back to 1400. Well, we closed at 1401. So you're looking at a 1395 to 1390 open on a 8 to 10 point drop, which isn't a whole lot, but it is from the standpoint of we haven't really covered a lot of ground. We've gone from 1390 to 1400 since the beginning of the week. We're just not moving all that much. So keep in mind that while up is up, I'm still playing it. We're still watching these overhead areas. That channel I showed you was good. This SPX channel is beautiful. Notice how we've touched the top of this, touched the top of the blue. We're right at overhead resistance. Now, tomorrow when the candle opens, we have room to run to the upside, and that still gets us up into the 1405, 1410 area before we hit this overhead again. However, keep in mind, we have now touched the upper side of this. When we've done it in the past, it has led to a drop. Will it happen this time? I don't know. I don't. That's why I'm telling you, wait for the bears to take over. When they do, you should have an opportunity. You will. You will have an opportunity to get yourself short, even if it's not on the first day. That's okay. You don't have to call the top here. Let the bears tell you, let the bears prove to you that they're ready to drag this thing down. Then look for your entries. Don't get too excited about this. You get too trigger happy up here. You start calling, you start getting short, and the next thing you know, you wake up and the thing gaps up $20 because whatever happened, and you're up, and you're like, oh, I should have waited one more day. Yeah, you should have. So you can get in short, but make it a small position and make sure your stops are in place. This is why I prefer to play the futures, because you can kind of get in and get out in the middle of the night if you have to. Here's the VIX, way low. You know how I feel about this. Really down here in the lower stretches too. This is showing a lot of complacency by the markets right now. We're not anywhere near that 20 mark. So as long as we stay down in this area, things are fine in the markets. Nobody's excited. Nobody's looking at a huge drop. Not right now. So the VIX playing along as it would be. Little bit odd from the standpoint of market up, VIX up, but we've kind of seen that the last couple days. So the VIX has been up the last couple days. Markets have been up the last couple days. So we are having somewhat of a. I don't want to. It's a divergence, but I don't want to put too much pressure on it because it happens. It happens within the VIX. The point is, if you get to the end of the day, and it hasn't moved all that much, it's barely break even, and that's not a big deal. The ones to really pay attention to were the ones last week. We had a huge move down in the VIX, and a huge move, and we had a big move down in the markets as well. That's a little odd. You don't usually get that. Of course, the next morning you woke up to a big gap up. That was kind of a crystal ball. So those type of major moves I pay attention to, but stuff like this, not a big deal. VIX was up, but not that much. Basically break even. 4 cents is nothing. So just keep in mind we're in the really, really low extremities here of the VIX. So not a lot of fear coming in right now. Same thing on the weekly, of course. We're looking at all of this. We've been in here now, 1, 2, 3, 4, 5, 6, 7 closes. 7 weeks in a row. We've been back within this complacency area, if you will. So there's just not a lot of fear right here. That's why I'm still not mega bearish either, guys. I mean, the VIX is fine, hanging on. FAS 60-minute here, looking for drops back below this 92 mark. That'll be your area to be watching if you want to play this long or short. It's short back below 92 and long above 95. If we flip to it daily, same thing here. Notice how we're pushing the overhead, okay? Keep in mind that the Dow went through this. The SPX went through this, and the NASDAQ just went through this, where it was pounding its head against this overhead, and it took it a while to get through. The NASDAQ just gapped up and over it. If you can't beat it, gap it. And that might be what happens here, but you're still looking at these same entries, okay? Still looking for pushes above here for your entries to the long side. And if this thing will giddy up, you'll get a very nice trade out of this. To the long side. So it tried today. It couldn't make it, but multiple attempts, I like it. I like it. Keep trying that thing to the long side if you get a shot. FAZ on the 60-minute then. This is for the bear side. If you're bearish on the market or you're waiting for a pullback in the market, you're looking for A, drops below 2070, which would mean obviously more bullish news for the markets. But B, if we pull back, you're looking for something back above this 2150 mark. I love this little range it's setting up here. Very nice. Okay, so it's setting itself up very, very nicely here. 2150 is probably your safest spot. Back above 2150 is where I'd recommend you look for a long position somewhere around there. And then back below this 2070 for your short. The daily, kind of the same thing. Notice here how we've been trapped in this big channel. That's why I'm kind of preferring we get back above this 2050, give us a little bit of leverage to work from. But as it is right now, keep in mind the FAZ is not bullish right now. It is bearish, which means that the markets are going up. They're not going down. Don't get ahead of yourselves. Don't get too bullish on this market. Too bearish on this market too soon. Let the bears tell you when they're ready to take over. When they are, you'll have your opportunity to get in. Even if you miss it on the first day, it's okay. Everybody wants to call the top. I understand that, but that isn't always possible, nor is it always the best strategy. So we wait. Here we go. Playing a little bit of leapfrog here towards the top. When and if this thing pulls back, you'll have your entries, you'll have your opportunities, and you should be ready to go. So hopefully that catches you up and gets you ready. Really going to start now that the summer's coming to a close. I'm really going to start to do more of these. So I will be working very hard. I know I make this promise all the time. I'll be working very hard to get you one out on Thursday. Sign up for the newsletter, $28 a month. Cheap. $1 a day. It's loaded with information. 15 to 20 minutes worth of video every single day except for Saturday. Well worth your time. And the mentoring. Guys, listen, if you want to do this for yourself, sign up for the mentoring. Get yourself involved with that. It's one-on-one. It's just you and I. There isn't anybody else. I work on your schedule. So whether you work during the day, whether you work during the night, I don't care. We find a time to hook up, you and I, on your time when you're available. And it's all one-on-one. So you get to work with me personally on a one-on-one basis. I'm here to answer all your questions. We go through a wealth of information. It's like literally going back to college. I say that all the time, but it really is. It's a college coursework. And once you've been through the course, I'm at your disposal forever. You can call me, you can write me, you can send me charts, you can whatever for the rest of the time. I don't charge any extra. I don't play those silly little games. It's one fee, it's forever, and we work from there. So get you guys into the right position so that you can do this for yourself, and then you'll know what to look for, where to find good charts, how to find good charts, how to draw lines on those charts, how to make sense of what you see in front of you, all that stuff covered in the mentoring. Write me about it, call me about it, and we'll discuss it. All right, guys, see you again, hopefully, cross your fingers, hopefully on Thursday. Bye.